Thank you, everybody. I'm very pleased to be able to present to you Heron Resources. We're focused, as you said, on the high-grade Woodlawn Zinc-Copper project, which is due to commission this year. There we go, thank you. So I just skipped over the usual disclaimer. You can read that at your leisure from the website. So Heron is a base metals developer. We're fully funded into production. We commenced building our project Woodlawn in September of last year. We expect to start commissioning of the project this quarter and to begin production of zinc, copper and lead concentrates from early next year. At the moment, we're sitting at about just under 80% complete in terms of the plant construction, and we've got the initial development going on the underground mine. A key differentiator for Heron between us and a number of our peers is that whilst this site has seen previous production, we are not a restart or a refurbishment. We're building a brand new state-of-the-art processing facility, and because of that we've been able to choose equipment that takes advantage of the latest technological developments. We have an initial 9.3-year mine life on reserves only, and there is excellent potential for that mine life to grow through resource and reserve conversion over time and through underground exploration. And a quick number for you, in terms of overall cash flow generation, once we're through ramp up, this project has the potential to deliver more than $100 million of EBITDA on an annual basis. A short overview of the company, market cap of around $150 million. We had $65 million in cash at the end of June. We have a similar number today. We've drawn $40 million US of our $60 million debt facility with Orion Mine Finance and expect to draw the rest of that by the end of the year. Our share register reflects the large capital raising we undertook last year to fund the construction, and you might notice we have three major private equity shareholders who invested in us alongside the public markets money last year. In the centre there, the board and management, we have a large board drawn from across operational, technical and commercial disciplines, and we also have representation from our three major shareholders. So just some background on Woodlawn. We're located about 3 hours out of Sydney. We're about 40 minutes south of Goulburn and about an hour out of Canberra. We're blessed with a wonderful location with excellent infrastructure. We have bitumenised roads going right up to the mine gate, so within 200 metres of the plant. We have railway connections going down to the ports. We have a port at Port Kembla, which specialises in the shipment of concentrates. We have States grid power on site, and we have water infrastructure on site also. So really fantastic. And as I noted earlier, Woodlawn was a previously producing mine, and we're very fortunate to have been able to draw on the expertise of people who previously worked there in both the mining and the processing plant. We've got some of those people with us now, and they should help us as we move this plant into production next year. So a fairly recent aerial shot of the site. You can see it's a stunning location at the top of the Great Dividing Range. It's looking quite brown in this picture, but I'm pleased to say it's greened up a bit after the recent rains. The old open pit is to the right-hand side of the slide, and the previous plant site is immediately below that. The new plant site you can see in the centre, it's being built in what was last year a degraded paddock. We do share the wider site with Veolia. They're using the open pit to store some of Sydney's biodegradable waste, and I'll talk a bit more later about the work we're doing with them. Other notable elements on this slide, you can see the new tailings storage facility, TSF4, the old tailings dams to the top of the slide, and the old tailings dams form the retreatment component of our two ore sources. To the right-hand side, we've marked the box cut. That gives us underground access to our second ore source, which is the high-grade underground. And across from the box cut round the back of the open pit, we have a haul road going around to the new plant site. Our feasibility study was completed in mid-2016 and it included ore from both the tailings retreatment and also from the high-grade underground. Some key metrics are shown here. We have a plant that's capable of running between 1 million and 1.5 million tonnes per annum. And once we're running at capacity, we'll be producing about 40,000 tonnes of contained zinc, 10,000 tonnes of contained copper, and 12,000 tonnes of contained lead. And we also have some significant silver and gold credits as well. In terms of costs, C1 costs of about 4 US cents a pound post-byproduct credits. This puts us very firmly in the bottom of the cost curve. And I think I noted before the cash flow numbers. So we've got a drone shot here of the plant site. This was taken probably about a month ago. So the site is moving on quite rapidly. But it does give you an indication about how the process plant is being put together. Our EPC contractor is Sedgman. The plant's being built under a guaranteed maximum price contract, which reduces the risk to us. In the picture here, we're looking down from the run-of-mine pad. Straight in front of us, we have the crushing circuit, which is coming together. We now have the conveyors are in place. The fine ore bin you can see to the lower right-hand side of the screen. And from the fine ore bin, the ore flows up into the grinding circuit through a ball mill and then an isomill. Across to the centre of the screen, we have the main flotation building. And above that, the concentrates move into the concentrate shed where they're filtered, thickened and stored for movement on containers to port. Oh, let's go back. A quick word to highlight the isomill. So this is a step change in technology in a plant that otherwise looks really similar to what was used at this site beforehand. The isomill technology was developed in the mid-1990s and has only gained widespread use since this mine closed. The isomill cost us about $7 million. It's important to us because it allows us to grind down to about 30 microns, which test work shows is the key liberation size for the metals. And this isomill is the reason why our tailings retreatment component is so effective, recovering metal that's in the tailings that simply could not have been recovered in the past. The isomill also will improve recoveries from the underground material compared to the recoveries achieved in the past. Here's the portal, recently developed by PYBAR. PYBAR is a New South Wales underground mining contractor. We have a 5-year contract with them. They're about 40 metres into this at the moment. They'll be approaching ore about 500 to 600 metres down the decline, so it'll take them about 2 or 3 months to get there. On the retreatment side, we've got approximately 10 million tonnes of tailings running about 6% zinc equivalent. Now that's pretty good gear. We'll be recovering this through hydraulicking, which is basically just using water jets to slurry the material down. The initial setup you can see in the slide here, quite well advanced. It's due to be ready in November in advance of commissioning. We have a simple and effective export route, which involves loading containers at the mine site, transporting them up to Goulburn on the back of semi-trailers, and then putting them onto rail for rail down in batches to Port Botany and to Port Kembla. And all the required contracts for this are already in place. In terms of offtake, we've signed a contract to sell 100% of our concentrates on very favourable terms for a period of 3 years to IXM. IXM are a well-known trader, previously known as Louis Dreyfus Metals. All key operational contracts are now in place, and we're in the process of recruiting our staff, our operating staff. We'll have about 70 staff on site. The underground mining contract will have about 100 people, and we're currently about 40% of the way through this at the moment. I did mention earlier we're working with Veolia on site. This slide just shows you some of this. So we're in particular cooperating on the site remediation. In the image you see here, our environmental officer is working through trials on some local plants using a mix of the local soils, but also a compost which Veolia is producing from the organic waste on site. Ultimately, the idea is that this compost will be spread over areas of the site and used in rehabilitating disturbed areas. So where does Woodlawn sit relative to peers? The answer is pretty good. The comparison I've shown up here has Heron in green alongside its 3 closest producing peers. I just want to point out a couple of things on this slide that make us interesting. Firstly, the high-grade nature of the project and the strong byproduct credits means that Woodlawn will sit in an attractive position in the cost curve. I've shown them after capital on this slide, and lower on the y-axis is better. No doubt it'll take us some time to get down to get the cost down as ramp-up progresses, but nevertheless it's clear that Woodlawn will be in a good position to weather the ups and downs of the metal price cycle over time, as indeed was the case when it last ran in the 1990s. Secondly, look at the total size of the bubbles you see. This represents total margin coming from reserves. We have significantly higher expected cash flow generation from reserves compared to, for example, Red River. And we're quite close to Trevali, which is a Tier 6 listed company. Bit of a market darling, current market cap $1.2 billion. Let's talk a little bit about the markets. On the left here you can see our revenue split. We've got just over 50% from zinc at current prices, just under 30% from copper, so about 80% of our revenue from those two sources. The markets for our base metals are quite challenged at the moment in terms of supply-demand dynamics, and that's led to some good price rises in recent times. For zinc, we've seen stocks being drawn down significantly, and this is continuing, with visible stocks now sitting at under 10 days of consumption, which is considered to be an extremely tight position. There has been some price response. Zinc's now at $1.20, off from recent highs of about $1.50 due to the trade war which is underway. We do, however, believe that the prospects for strength in the zinc market remain very good. It's a similar story in copper, which is also off recent highs due to the trade war. There is a deficit emerging in terms of supply and very good demand dynamics as well. So copper is thought to have some of the strongest supply-demand fundamentals going forward for the next few years. So to wrap up, I was going to talk a little bit about some of the exploration opportunities that the company has within our existing portfolio. What we did when we financed the mine was to put together a minimum position to get the thing funded. And we have plenty of opportunities to extend the project, and now we're turning our attention to those as we hit production. 2 parts to this. Firstly, in-mine exploration. This is about advancing our inferred resources. We've got 7.2 million tonnes of total resource. We've converted 2.8 of those at present. Very good potential to extend that further. We also have very good adjacent targets, step-out targets, and deeper drill targets within the mine system. And we also have nearly 1,000 square kilometres of tenements across the local area, which are our greenfields deposits. To give some perspective on Woodlawn and where it sits, we've laid it here alongside Golden Grove and Rosebery, 2 major deposits within Australia. I just want to show you that really what leaps off this page is that Woodlawn, whilst it's undoubtedly large with an endowment so far of 23 million tonnes, in terms of the depth of extension, it really hasn't been explored all that well. So there's plenty of opportunity for us to go deeper and sideways to find more. This shows you some of the target areas that we have. And here I'm just going to show you Currawang. This is a regional deposit 10 kilometres up the road, 500,000 tonne producer, and good prospects for us to find more here. We've done some EM and still some further work to do on this deposit. Now, I have run out of time, so I'm just going to skip to the end here. Why should you buy Heron? We're transitioning to production. We have an attractive mix of base metals, particularly zinc and copper, both of which have good supply-demand dynamics. We've seen some share price weakness as we've moved through the construction period, and there's good potential for a re-rating in the share price now that production is imminent. Okay, thank you very much.